This is the International Opportunities strategy. It's managed by 3 portfolio managers, myself, Mike Mufson, Ezra Samet, and Don Smith.
The International Opportunities strategy is a concentrated portfolio of 35 to 45 stocks of companies that are located outside of the United States in both developed and emerging markets. Each stock in the portfolio, we believe, is a business with competitive advantages that we can understand and forecast. We have a meaningfully above consensus view of the earnings power and free cash flow over multiple years. And then each stock is trading at a multiple which we believe is attractive based on our expected earnings and free cash flow, which allows us to monetize our differentiated insights. The portfolio is constructed with an eye towards stock-specific risk, minimizing and mitigating unintended risk factors, and ensuring that it's those idiosyncratic differentiated forecasts that are really the driver of portfolio returns.
The International Opportunity strategy leverages our investment philosophy and process very well because of the inefficiencies in non-US markets. It also allows us to offer our clients an opportunity to get diversification outside of the United States to complement their existing portfolios.
So each of us at Redwood is both a portfolio manager and an analyst, which means that we all cover individual industries and have responsibility for the stocks in those industries. This is a wide universe of stocks, 2,000 plus distinct securities, and we've developed the Redwood Spotlight tool. Allows us to very quickly shine a light on those stocks that have the features that we're looking for and which are prospective ideas for us to then go and do our fundamental work. As analysts, we begin with that list of vetted ideas, and the fundamental analysis is really focused on a couple of things. The first is understanding the business and the business model, the industry in which it operates, and assessing whether there is in fact a significant structural competitive advantage that we can dig into and understand. We also assess management and assess the financial position of the business in terms of the balance sheet. The other core focus is identifying the key drivers of earnings power and free cash flow over multiple years. We want to really identify and isolate the key things that are going to move the needle, and then we do our deep fundamental work on those key drivers. And when we find that our forecasts are meaningfully ahead of what we think the market expects, that's when we get really, really excited. We really believe that we get the best of ourselves when we collaborate, when we vet each other's ideas. We refer to it as a process of shared conviction, in much the same way that the academia uses peer review to authenticate and verify a thesis. We apply the same standards to our investment ideas. We balance that with making sure that at the portfolio construction level, risk is coming predominantly from those specific stocks so that we are not taking unintended big bets on unpriced risk factors like country, currency, industry, or style factors.
So when we run our portfolio construction process, generally we end up with an exposure of approximately 70% of the portfolio in developed markets and about 30% in emerging markets. I think there's 4 key aspects that differentiate the International Opportunity strategy. First is that commitment to the differentiated view. Every stock that we own in this portfolio, we have a forecast that is structurally higher than the consensus expectations. That's our line in the sand. Every name must have earnings growth that is expected to be above the consensus expectations. Second, we run a concentrated portfolio of 35 to 45 stocks. These are high conviction names where we strongly believe that the opportunity set for each name is excellent. Third, it is a go anywhere portfolio, meaning that we don't have any biases against a country or a sector. And finally is we are all cap. We'll consider names in mid cap, large cap. We're just looking for the best ideas in a broad set of the universe.
The last piece to the philosophy is, and the reason that we operate in the international markets, is that inefficiency, that opportunity to be different from the consensus is significantly more prevalent and amplified in emerging and international equities than it is in the US. The US market has a few features that we think make it more efficient. Among them, an enormous number of analysts paying attention to every single stock. We believe when we look in corners of the markets where the wall of money is not looking, we find more opportunities.
I think what excites me the most about this product is the long-term potential. We think investors aren't paying attention to many of these stocks.
And it is really, for both of us, our culmination of our professional careers, of our life's work. So it sounds a bit cheesy, but we're really deeply committed to it.